Good morning and welcome to the early bird. Here we're looking at the S&P 500 and well, yesterday we've been looking at two wave counts, one to the upside and one to the downside. Not that it makes it any easier for us, but we just have to allow this to play out. And I'll just go back over the two counts. The bearish count is in red, and that's simply that intermediate wave 2 here is done and dusted, and we've got down for 1, back for 2, down for 1 of the next degree smaller, back for 2, down for 1, and then last night back up here for wave 2 like we expected, and then from this point here we would see the market move down from here in a series of third waves. And if that's going to be the case, then that would move down rather quickly. In fact, it would pick up speed on the way down. Now, the upside count would be this: instead of having a wave 2 here, we would have wave A here and wave B over here as a triangle through here, and then wave C going up there in 5 waves, and then that would create the top there of wave 2 over here. So it'd be looking for 5 waves up through here. So this would be the A, the B, the C, the D, and the E through here. So essentially this would be up for wave 1 here, back for wave 2, and then moving up through there. So the balance point in here was 1250. Other markets have got their balance points as well. We've been talking about copper at 350, which is important for our commodity-based country. So this little scenario in here, we've got this structure down here, which can be counted as 5 waves, but as you could see, it also be counted as 3 waves down here as well. So we tend to go with the 5 waves down here and looking at the red side here. But if this is going to continue to push up through here, then we need to look at the bullish count. So anyway, that's it really. So if we just have a closer look at this S&P 500 in here and drill down in a little bit, we've got this 5 wave structure coming down through here for, we'll just call it wave 1 for the moment, and then wave 2 coming back, the 61.8 retracement level there of that distance there in 3 waves as well. So that's what we'll be looking at there, and we'll see the market move down from here. Look, so if that was going to be the case, we're going to use the levels here, well then we'd want the 1250 as a resistance through there, so a retested resistance to short from there. Technically, we wouldn't have the bear market until this low here had been taken out through here, so just bear that in mind. We may get some sort of bigger pattern through here as an E wave in the triangle, like an A and a B and a C here for the E wave of the bullish triangle. And if we were going to push up from that point there, we were looking at we're looking at 44 days for rally, which would be I think from memory December the 6th. So you can sort of bear that in mind. We'll be looking for 5 waves going to the upside. So our preference is to the downside, and this here as a rally here. And the reason that we say that for is the pressure on the bonds, the European problems there, and sure, they can simply print more money and change governments and so forth, but it's still there. But they can certainly prop it up, as we know, by simple positive steps there. So we need to be aware of things. We need to really see where the weight of the market is. So as I mentioned before, this is the line in the sand, and we should have a pretty good idea before the week's out. And just talking about the week for a moment is that in a bullish cycle, in our bullish weekly cycle, it's normally Wednesday that creates the high for the week, or possibly Thursday morning, but normally the Wednesday night. So if we get a positive day today and we have a higher closing today across our markets, then that weekly cycle is possible. And if that's the case, then if Wednesday is going to be the sort of the high in the afternoon session, then Thursday is highly likely going to be the bearish day. So any longs that you get today will be sort of under pressure tomorrow. So if we are in the bullish cycle, then I think that we would want to see a high today. We'd want to see lows tomorrow. We want to see the volume drying up in the afternoon session on Thursday, and then possibly going in and buying some stock at that stage, and then moving in Friday morning and Friday afternoon if there's going to be a strong closing, and then we would see the follow through on the Monday. So that's what we would try and get on the bullish side of things if we were looking at a local market. What's this? This is BHP. So on the bullish side things, we would be looking for this here to be up for 1, back for 2, up for 3, back for 4, and up for 5 here. And then we would have the A, the B, and the C correction here, moving back down to 61.8%. But it doesn't have to be like that, of course. But so we'd look at that somewhere in amongst the 36 here. You know that the 3650, the 65 as I call it, is always really important, and that's what we'd see there. So seeing BHP come down to 3650 would be, and that would be the sort of a reasonable 50% retracement level as well. So that would be quite a bit of a norm through there and a trend line through there. So we could see this move down further. So if we're going to see a bullish market, then we'd see another 5 waves up here. So as we've got this 5 here, then we'd see the A, the B, and the C, then another 5 up through here, which would really come up into the 40 there, if that was going to be the case. Otherwise, this would have fallen out of bed from here if we got the bearish count. So just bear that in mind when we're looking at BHP on our local market, on the US market here. We're still seeing it. This is a weekly chart here, but we've got a very clear 5 waves down from the high here, and we can see that this is an ABC correction up here. In terms of distance, it's kind of fine. In terms of time, it's a bit light on in terms of the 3-4 weeks it had here in relation to how many weeks it had come down here. So it doesn't really have the right look or feel about it. But we're not really tempted to be long unless we were above the 80 there as support. And this would bring us into our local market at 4,300, which we've been looking at as well. And I'll just look at that now since we're on that particular trail there. You can see that the 4,300 through here, it still hasn't found support on it, has it? You know, it's kind of like waiting to suck you in and then drop. So we just really need to be careful. We need to wait for support to come in on this here. And look, it may do and it may not. It's not really it doesn't matter if it does or not. What we want to do as traders is we want that as support so we can move on from that. And yes, it may and it may not. So we'll see how we go. Yeah. I just want to go on to copper as well, because that's our other driving sort of factor as well. And with copper, we've seen this move come up into copper through here. It's met supply over here, and there is plenty of supply over here, plenty of selling over here. All of this through here is quite strong. So, you know, we need it to also play out at the 350 level here, which it's basically doing. We could count this here. This stage here would have to count it as corrective, in terms that this would be an A and a B and a C wave up here. Yeah, but we could call it the 3rd wave and the 4th wave pulling back down through here. But if the 4th wave came back, if the price came below the 345 now, then it would be a little bit dangerous at that point, and we would call it a bearish market there. And in fact, we do have, this is pretty much the same sort of pattern as the indices, and we'd be calling this as 5 waves down through here as well, with a corrective move back up here and then failing from there. But we want the evidence, so we just need to give it time here to become the support or the resistance at this level here. So this is something else that we can watch, and this is important if you're going to start shoveling money into the long side on our local market, and that's why I'm spending a bit of time on it. We want that support really with the US BHP on 80. We want to see this with really solid support on here, and making a bit of a move to the upside. Yeah, so they're the key things that we want to see, and we just don't have them yet. So there's risk because the currencies are leading to the downside, and this pattern here is corrective. This is impulsing to the downside here. This is corrective here. So there's a lot of signaling that that we're in bearish mode, but we just want to get evidence of that bearish mode too. And if we are going to go to the long side, then that's fine too. But we want to see support, and we want to be working off something. We just don't want to go in and risk face that kind of exposure just for the sake of feel like we're missing out on something. So look, if the market is going to break to the upside, we'll get it. There'll be plenty of space to the upside. Don't worry about that. But there'll also be more space to the downside. That's the real clincher in it all. So with the Dow Jones, you can see that this pattern here looks quite chirpy to the upside here. The 12,000 here would be the support through here now from this retest here. So we could say that if the Dow comes down and takes out its lows here at this 12,000 through here, then that would be a sign of weakness, wouldn't it? If the market came up through and sat on top of the 12,200 there, then we'll say we'll be breaking out to the upside there. So that's something that we can also look at as well. But we just need to see this rally here sort of play out and see what we're up against there on a small chart here on the Dow Jones 4-minute chart. You can see that we've got that rally that we're looking at is the A, the B, and the C here, even though it's got support on the 12 here. So, that to me is a nice little A, B, C, and that should be a top within here. But, we still need evidence for this to play out through here. So we'll wait for that. So you can see that if we move back down through here, obviously it's going to be bearish. And if we find support on top of the 12,200 there, then we'll be looking at going higher at that stage there, and we'll be looking through to early in December the 6th on that 44th day. There would be something to sort of throw on the table that we could sort of work around and debate and so forth. So okay, so the currencies here, this is the US dollar here, and we were looking for wave 2 to come into play. It looks like that's coming to play. We've moved up there nicely on the 4 hour, so everything's going according to plan there. We're at 78. 8's a profit taking number. It got hit here quite hard. It's pushed up sort of higher through here, still got sold off but found better support. So this time here we can expect it to have some sort of ABC correction through here, and then push higher through there. So any push higher through here is going to put pressure on indices. So we're pushing indices down. And the euro would be the opposite to the downside as well. This is not a 4-hour chart, but a 30-minute chart here. So that last wave we've seen up in the dollar would be in 5 waves. So this is also 5 waves down through here. So it's likely that we see some sort of ABC correction come through here. Of course, an ABC correction after 5 waves down like this would see a 61.8 retracement level, but the euro doesn't normally do that once it starts a trend, but we just need to see this play out. But once we get this ABC correction in here, then we can look to short again. So obviously the supply levels, while there's resistance at the 72 here, 13572, this whole group through here would be the resistance here, and probably a likely place to come back to as well. The 3rd, 4th wave of 1 lesser degree. The euro is quite common for doing that there. So from this bounce here, this is where we'd be looking for some sort of rally. So after this rally completes, then we'd be looking to short that there. So if we look at that rally in terms of a 4-minute chart here, you can see that we've got this impulse wave to the upside through here, and as long as in this impulse wave through here we've got 135 here. So we got 10, 20 and 30 as support here. So as long as that support holds here, then we'll see further upside there. So you wouldn't trade this long here until you had support on top of the midpoint here, the 50. If you get support on the 50 here, then you'll know you'll get to the next level, like this one here. It happens rather quick, but you've got to be on it. So there'll be profit taking at 65. You probably get to 72, but you take your money out at 72, some at 65, the rest at 72. If 72 became support, but then you'd move on from that point there. But this is a corrective rally, so it's not easy to trade, so don't expect to go for the longer term. This is the first area of resistance through here. If it makes it through here, then you can look at 13630 to get to the other side there. There's normally equality between waves A and wave C coming up through here, so that should be around the same length and time, unless something doesn't drop out of the woodwork, so to speak. And the Australian market's the same with the Australian dollar as well. The same sort of pattern. Let me just find that for us here somewhere. So we've got that same sort of pattern dropping off the bottom here because we've had 5 waves come down through here. Let me just find these charts here. Just get a little bit organized. Okay, that's the 4-hour chart here. The reason for showing this is that, as I mentioned, when we're coming down through here, we understood that this number here, the 10272 is the main play here, and that's what this would be a retest of. There, how far that goes up is another story, but basically we've had 5 waves down through here, so we're looking for 3 waves back up, and then for it to fold over through there as well. We are now in group 1 here, so 103, 102, 101, and the 102 here would be the pivot within this group 1. So give it a little bit of time at 102, because it's been to 101 to find support, back up to 103 to hit supply here, and back down to get demand here, and be going back up here to meet supply that will drop down another level down through here somewhere. So it's a game of supply and demand and support and resistance, and the 102 here will become the balance line through all of that. So give it some time there, and you'll be able to see get the timing right to trade long or short from that point there. Just looking for another chart that's a bit smaller than that, but can't see it. Just want to have a look at gold for a moment as well. With gold, we've got a count to the downside in terms of, a bit like the US markets, in down for 1, back for 2, down for 1 and back for 2, and so forth down through here. But if the US market goes up, then we'll be going up as well. So this 1772 here is the critical price point here. If this becomes the resistance next time around, then you can look to short from there, adding at 65 as resistance. Don't do it when it first gets there. When it comes through, the breakout is important, but the retest is more important, and then look to short from there. Cover it at 750 if that's your at the midpoint if you're short-term trader. Otherwise, wait for the midpoint to become the resistance to look to add again as well, and then you wouldn't add until you got down here at 17, after it bounced around a fair bit in this whole area down here, and 1720 became the resistance at that point. If that's going to be the case, while this is got support here, then you certainly need to look to the upside here, and then that would be taken out through here, and this 1800 here would be just seen as a normal trading levels pattern unfolding in a larger degree in terms of the arrival, the reaction, the support, and then the 5 waves that would move up above the 1800 there. So that's possible as well, but whichever way you go, be on the right side of that 1772 there. With silver as well, there's the down count for silver as well, and just the same thing I mentioned with gold just then. But sideways patterns to me tend to sort of break to the upside, so we'll we need to be very clear on shorting. So in this particular case here, the Fibonacci number 34 is playing a central role within this, as it always does. You would really want this to be locked under 34 and retested, and failing retest to start shorting there. And if that was the case, then we've got long-term short positions happening in there. But while it's above that, then it's fine. If you wanted to be safe about everything and go long, then wait for support on 35 and go from that point there. But keep the stop sort of way under here. Keep it safe, you know, because silver spikes a fair bit. Okay, that's really it. Really, it's really just the S&P 500 that needs to play out, and we've got it here. This is the 1250 here. We're considering this move up through here, a rally that will end. If the 1272 becomes support, then we'll be looking for a higher breakout, and we'll be looking for December 6th kind of stuff to continue to the upside, and then we'll be long on the ASX 200. So we'll start looking at all the possibilities there to be longer term long. But in the meantime, if after this rally here, if it does what it's expected to do and drops back down and finds that as resistance there, then we'll be long-term short from there. So pretty exciting. And as you can see through here, with most markets are in sort of triangle patterns of one degree or another, but they're all diminishing into a particular point through here. So lower highs and higher lows through here really bring us into a balanced point to trade from. So a little bit of patience so we get on the right side, and just stay light and flexible until that point. Alrighty, well, good morning and good luck.